Hi all, Tony Bartels here with the VIN Foundation. I just wanted to provide a quick update on what we know regarding the student loan interest waiver and the press release that came out from the Department of Education last Friday. We are covering all the updates on the VIN Foundation blog area, so this is where I'm going to be posting more information as we get it. We have posted this particular recent press release and the impacts of it to this blog post on vinfoundation.org, but I wanted to just go through a couple of these because I'm starting to get a lot of questions about what folks should do with their student loans. And the two major points provided by the Department of Education in this press release last Friday are that your student loan interest rates for federally held student loans will be set to zero for a period of at least 60 days, retroactive to March 13th, 2020, when the president made that announcement. You do not have to do anything in order to get that 0% interest rate. You don't have to call your loan servicer and request it. The only requirement is that you have federally held student loans, and I'll come back to that in just a minute. The other part of this press release is regarding the administrative forbearance. So you can request an administrative forbearance from your loan servicer that will take effect for 60 days. And because the interest rates are going to be zero, no interest will accrue during that period. So administrative forbearance, you would have to request from your loan servicer in order to stop payments. However, I would caution against utilizing the administrative forbearance option. If your income has or will decrease because of this COVID outbreak, then I would request to have your payment reduced based on that reduction in income while staying in an income-driven repayment plan. It's a little bit unclear as to whether or not the forbearance option, although there's no interest that accrues during the administrative forbearance, once you end that administrative forbearance, if any of the past interest, the unpaid interest that you may have accrued to date, would be capitalized when you exit that forbearance. So again, I'd be really reluctant to use that without any more clarity on that particular issue. And I certainly wouldn't want to find that out the hard way, right? So again, I wouldn't change anything, particularly if your income hasn't changed. The interest rate of being zero is going to be great, right? Because then all those payments will go first to your unpaid interest and then directly towards your principal. And you'll still get credit towards forgiveness. That's particularly important if you're already using income-driven repayment and planning on student loan forgiveness, or if you're working towards public service loan forgiveness. Because as this press release even states, administrative forbearance does not count towards the time that you're logging towards public service loan forgiveness or the taxable forgiveness under income-driven repayment. So let's come back to this federally held student loans, right? So how do you know whether or not your student loans are federally held? The easiest way is to first go towards your loan servicer and see if you can identify direct loans, right? So if we come back to, I have Navient for part of my student loans. I also have Great Lakes for the other part, and I can see that I have consolidation loans that are owned by the U.S. Department of Education. Those are going to have an interest rate of zero per this waiver. My Navient loans, on the other hand, I'm going to come back here and log in, are an older type of student loan. So what are commonly referred to as federal family education loans. Now, you're only going to have these if you utilize student loans prior to 2010. Right, so if you didn't have student loans prior to 2010, then you're not going to have these types of loans, right? But if you do, then you want to log into your respective loan servicer and start looking at those accounts and see if you can identify the owner, right? So in Navient here, they say current owner, Navient Federal Loan Trust. Those are not federally held student loans, right? So the interest rate on this particular balance in my student loan portfolio is not going to be set to zero, right? So that's how you can identify that. One of the other ways that you can identify this is to come over to the VIN Foundation My Student Loans tool and load your student aid data file into this system. So if you haven't done that before, we've got a protocol here that will help you obtain your student aid data file. I'm going to load up mine, which I've already loaded into here. And a couple of other features that I want to just point out while we're in here. again, just because the outbreak and the student loan interest waiver has been issued doesn't mean things are stopping as you have come to expect them, right? So if you're using an income-driven repayment plan, I'm using the revised pay-as-you-earn plan, I still have to provide income documentation, and I'm in my renewal period right now. So we have a feature in here that will tell you if you're due to renew. If you are, I would highly recommend that you continue to renew using the most current or accurate income documentation that you have available to make sure that you're still your loans are still in repayment and in good standing. But I'm also going to highlight here we have loan servicers, so I have multiple loan servicers. I see here Department of Ed, right, which is an indicator that the loans that I have of this balance are federally held. Then I also have the smaller balance that's with Navient. It does not say Department of Ed in front of it, which is a good indication that they are not federally held student loans, right? So this is another way that you can tell whether or not your student loans are federally held or not, and just help you to account for the different balances. We also have a tool here that'll show you which income-driven repayment plans that you're eligible to use. So I mentioned before that I'm using revised pay-as-you-earn. That's primarily because we do not qualify for pay-as-you-earn. The other thing I wanted to highlight while I'm in here, so my monthly payment right now is $616. I'm accruing about $900 a month of interest. Now that's going to go to zero for these direct loans that I have, so the lion's share of my student loan balance. So now that $616 payment is going to first go towards my unpaid interest balance, and then if and when I pay off that unpaid interest balance, depending on how long the student loan interest waiver carries on, then any additional payment would go towards the principal, right? So long term, if you're planning on forgiveness and you're making the minimum monthly payments based on your income, this will likely just decrease the amount that's forgiven, particularly if you have an unpaid interest balance. But if you're starting to dig into the principal, then it could help you potentially pay your student loans to zero before even reaching forgiveness. So again, stay tuned to the information that we'll continue to post on this COVID-19 blog post. Ask a lot of questions. Post on the VIN student debt folder if you have more specific questions, as many of you are starting to have, depending on how you're affected by this. But stay tuned, stay safe, stay healthy, and keep asking questions.